Thank you, boss. So, how are you doing, guys?
We are good, boss.
Okay, let's start our meeting.
Okay, hello everyone. Today we want to discuss about company financial. So first is current financial liquidity ratio. Current asset and current liability in 2021 as we show, and current ratio in 2021 is 0.7.
First, liquidity ratio, current ratio. The ratio is 0.7 in 2021, indicating excellent liquidity. It increased to 0.75 in 2022 and then continued to increase to 0.76 in 2023, indicating that the company can maintain its good ability to pay off short-term debt. Second, liquidity ratio. Quick ratio. The ratio is 0.51 in 2021, indicating excellent liquidity. It increased to 0.52 in 2022 and then continued to increase to 0.54 in 2023, indicating that the company can maintain its good ability to pay off short-term debt.
Okay, next.
And the next is current financial capital structure ratio. Total liability and total asset 2021 as we show, and ratio in 2021 is 0.74.
For capital structure ratio, first, debt ratio. In 2021, Unilever has reached 0.74 for their debt management ratio. In the following years, which is 2022, Unilever's debt ratio has decreased to 0.72. In 2023, Unilever's debt ratio is also unchanged at 0.72. The line chart above show that the trend of the debt ratio decreased from 2021 to 2022 and does not change in 2023.
Okay, who's the next presenter?
I will present asset management.
Okay.
Okay, for the next slide is current financial asset management efficiency ratio. For the sale in 2021, we got 10,305,000 ringgit, and for the total asset, we got 75,095,000 ringgit. Okay, for the total asset turnover ratio in 2021, we got 0.14.
Next, asset management efficiency ratio. First, total asset turnover ratio. In 2021, Unilever has achieved 0.14 times for management turnover ratio of their total asset. In the following year, which is 2022, the turnover ratio of Unilever's total asset has decreased to 0.13 times. In 2023, the turnover ratio of Unilever's total asset has increased to 0.15 times. The line chart shows an irregular total asset turnover ratio over 3 years, reflecting Unilever's efficiency, revenue generation, and effective capital use.
Okay, next. Okay, for the next slide, I call our board of directors.
Next, I will present our profitability ratio. So as we see, gross profit margin in 2021 is 23.93%.
And next, profitability ratio. First, gross profit margin. Gross profit margin has shown a positive trend throughout the 3 years. In 2021, margin show as much as 23.93%. In 2022, margin increased slightly to 24.11%, showing a slight increase of 0.18%. In 2023, margin continues to increase to 25.58%. This positive trend shows Unilever's growing ability to retain more revenue as profit, likely due to better cost control, increased pricing power, or more efficiency production process.
Next, I would like to call our secretary to present our recommendations to our company.
We can present recommendation to our company. In 2021, maintaining an open lines of communication with stakeholders on this plan will also help to increase trust in Unilever's strategic plan and financial stability.
Next is recommendation to Unilever. Liquidity ratio. First, current ratio. From 2021 to 2023, Unilever's current ratio rose from 0.7 to 0.76, indicating improving liquidity and a better capacity to meet short-term obligations. Although still below the optimal level of 1, the upward trend reflects effective financial management. To further ensure liquidity, Unilever should focus on faster receivable collection, negotiating longer payment terms with suppliers, and better inventory management. Utilizing financial technology for cash flow forecasting and maintaining open credit lines will also support liquidity. Clear communication with stakeholders about these strategies will bolster trust in Unilever financial stability. Second recommendation to Unilever is capital structure ratio. First, debt ratio. Unilever's debt ratio decreased from 0.74 in 2021 to 0.72 in 2022, maintaining this level in 2023. This indicates a more stable capital structure and lower financial risk, reflecting reduced reliance on debt. To further improve its debt ratio, Unilever should focus on using retaining earnings for investment, maintaining strict cost controls, exploring stock financing options, and streamlining operation to boost profitability. Clear communication with investors about these strategies will strengthen trust in Unilever's financial stability and commitment to long-term growth. Next, for capital structure ratio is times interest earned ratio. Unilever's times interest earned ratio fell sharply from 0.87 in 2021 to 0.24 in 2022 and 0.08 in 2023, indicating a significant drop in its ability to cover interest costs. Despite an improving debt ratio, this decline raises concerns about solvency. To address this, Unilever should prioritize increasing profitability through cost reduction, revenue growth, and efficiency improvement. Additionally, reducing debt and renegotiating loan terms to lower interest costs will help. Clear communication about these strategies will maintain strict stakeholder trust in Unilever's financial stability and commitment to long-term solvency. Next recommendation to Unilever is asset management efficiency ratio. First, total asset turnover ratio. In 2021, Unilever's total asset turnover ratio was 0.14 times, dropping to 0.13 in 2022, but improving to 0.15 in 2023. This reflects more efficient resource utilization, leading to increased sales. Second, fixed asset turnover ratio. Unilever's fixed asset turnover ratio was 0.97 times in both 2021 and 2022, rising to 1.07 times in 2023. This increase demonstrated Unilever's improved ability to generate revenue from its fixed asset. Second last recommendation to Unilever is profitability ratio. First, gross profit margin. From 2022 to 2023, Unilever's gross profit margin increased from 23.93% to 24.11%. Next, profitability ratio. Operating profit margin. Unilever's operating profit margin increased from 16.6% in 2021 to 17.9% in 2022 but dropped to 16.4% in 2023. This decline is likely due to decreased operational efficiency and rising raw material costs. Last recommendation to Unilever is market value ratio. First, price to earning ratio. Unilever price earning ratio decreased from Rm 2.04 million in 2021 to Rm 20 million in 2022 and further to Rm 14.29 million in 2023. This decline indicates the investors are paying less for the company earnings, likely due to market conditions and rising stock prices. Second, price to sales ratio. In 2021, Unilever's price to sales ratio was Rm 2.3 million. It declined to Rm 2.60 million in 2022 and further to Rm 1.25 million in 2023, indicating a notable decrease. This suggests decreasing market confidence in the company's future revenue growth.
Okay, that's all for today. Thank you.
Thank you for today. Our next meeting will be on Monday. So we will discuss about how to upselling to our company. Okay, thank you. See you.
Okay, boss.